Tesla Q2 earnings report. So what you're looking at right now is the picture of the model of the Gigafactory, the Model Y factory rendering. This is what it's going to look like, the Gigafactory in Berlin. They also announced that they're also going to build one in Austin. So this video, you'll see we're going to try and give you a pictorial presentation, and then at the end we will give a brief opinion. So I'm going to scroll back now to the beginning of the slide so that we can all start from the very beginning and you have a look. We are going to include the link for you to have a look as well. Okay, this is this presentation is from SeekingAlpha. So we'll continue with the presentation while you watch. You can always pause. You can always pause and read up before you continue. Okay, that's the end of that presentation. So in the summary of all of that is that the Q2 non-GAAP EPS, earnings per share of $2.18, may not be comparable to consensus of minus 0.16, and GAAP earnings per share of 0.50. Revenue of $6.04 billion, which is for year on year it is down 4.9%, but beats by 640 million. And automotive gross margin was 25.4 versus 24.14 consensus, and 18.9% a year ago. And shares said that was up that. People write their opinions here on SeekingAlpha, and it says an EPS of 50C, that's about 0.12% return per annum. If I buy a share now at circa $1,600, no thanks. Even my bank pays better than that. And it's not often you can say that. You don't understand. If you buy that share, then you become a genius instantly, and everybody who doesn't own one is a moron who doesn't understand the future. Does a bank give you that? Okay, sorry for the foul language you have read out there. Automotive gross margin 25.4% versus 24.1% consensus at 18.9% a year ago. Apparently, Zachary Kirkhorn doesn't agree from the 7th of July, so 22nd of July earnings call. Our alternative gross margin, excluding regulatory credits, reduced sequentially from 20% to 18.7%. What Shorties fail to realize is most Tesla bulls are buying Tesla cars from profits from this recent short squeeze. This boosting the sale numbers and double murder for shorts. Okay, there's a piece here. Bill Ackman bought a Tesla separately says he short high yield names. Pershing Square hedge fund manager Bill Ackman, in an interview on CNBC, said he is about 20% cash, but long nearly 100%, given his levered positions, but fundamentally believes levered names will struggle and the Fed is unlikely to bail them out. Ackman was on discussing his positions and defending his call that hell was coming. He noted that he said the circumstance could occur if no action was taken. He is cautious now as virus cases surge, but ultimately believes action will be taken by states. Okay, this is what he says about Tesla. He says Tesla cars are the future, and he bought one. I think it's a very good car. But to own a stock, you need to think very good things about the equity, and he likes to own stocks where you don't have to be so visionary about cash flows. Okay, so this is the chart. This is what it's currently trading at. It is trading at in the pre-markets as we record this videos 1,678. So we also did a bit of calculation ourselves. Based on the closing figures for yesterday, so that for the standard deviation for 10 days, the standard deviation for 10 days is the price range for one standard deviation for 10 days is 1,500 597.05 to 1,663.71. So it closed at 1,592.33 on July 20th. Yes, that was yesterday. So it's actually within, we would say it's just about $5 or thereabouts shy of this price range. This is, one standard deviation. So and then also the current price right now is 1,678. So it's based on what it closed and based on what it's currently trading at right now in the aftermarket. It is not exactly within that range, but it's just within touching distance of that. Not very far off from that. This one standard deviation. Usually one standard deviation, because Tesla has also pulled back a bit of late. In as much as you can also say that it has been on the upward trend, regardless of the current consolidations that have occurred. But yes, those consolidations are also important, So based on all those consolidations and all that pullback, we can even actually see that the Tesla is within its one standard deviation, and by some metrics, it's a good buy, So I'm just interpreting what the data is saying. I didn't come here to promote Tesla or anything, but just based on this data, one can say that yes, it might be a good time to even go in and trade Tesla. Okay, thank you very much for watching this video, and please don't fail to subscribe to our channel. And hit that notification button. Sign up on our platform Equity for Keeps, and that is eq4k.com. Support us through PayPal or Patreon. Okay, thank you very much again. Don't fail to subscribe to our channel and hit that subscribe the notification button. Thank you.